Good evening, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up, and this wrap-up is for the evening of Monday, and we're here now at the 13th of January, 2025. All right, my friends, interesting day. You're going to get some news in the morning. You're going to get the National Federation of Independent Businesses. They'll come out with their release, and that's going to be at 5 a.m. Comes out in an ungodly hour. Why then, I don't know. The December report was 100. They're looking for 107. December PPI numbers are coming out. They're looking for a 0.3% increase. And we'll get Red Book retail sales. They come out weekly, and they've been running 5.5 to 6% increases. And that's a good set of numbers there. So everything's been strong. Now, I have done a special report for everyone on the dollar index. You can take this and look at it as UUP if you're a SPDR ETF person, or the futures. And the reason that I did this is with all these reports, with the Trump transition to presidency next Monday, a week from today, it's time to look at what this dollar's doing. It's been on a tear to the upside. I've told you over and over in my other reports, I was looking for the 109.80 level to be a resistance point. You went right there. Now, if you look at what we have in our price counts, and I give you a lot of that information in this, you're going to see the price count. You're going to get the seasonality of the market, what happens in early January, in which the market is defined. Normally, you break down to this point. You haven't done that. Markets that go contra-seasonal are often stronger than the market gives them credit for. So you've got to pay attention to that. And now begins the potential thrust in the dollar. Take a look at the report. It's at iraepstein.com. And when you look at the report, you'll see it when you go to our website. It's just on the top left. Give it a click and away you go. Can't make it any easier for everyone. So a couple of things have been happening here, and let's get to them if I could. First off, home builders, KB. Whoa, this is very important. We're seeing big increases. I didn't expect that. The book is filling up. As I'm looking at what's going on there, 7% mortgages are happening. People are accepting them. Remember, we were just down 3% mortgages, 2% mortgages. We've gone up triple, and the market is so fraught that that's what's going on. We still have the situation coming at us with shortage potentials in materials for home. Think of California and all that's going on there. And the thousands, there's 13,000 structures now that they're saying have been destroyed. I don't know the percentage of them that are homes, but it's probably near 60, 70%, I would guess. And how much of that's going to be rebuilt? If you have insurance for fire, you're probably covered, and you're looking at what you do. But as I said over the weekend, it's going to be wasteland for a while. Commercial buildings that burn down, they're not there to service you anymore. You got to travel out of the community until this all gets rebuilt. It takes time. It takes perseverance. But there's one thing they're not making any more of, and it's called land. And these areas will be rebuilt. Now, will they be rebuilt smart? If you have a brain about you, they will. Certain structures did better than others in these fires, and that's what you want to be looking at. So we'll see what goes on there. But it is interesting what the housing market is doing. So does this bode well for things? I was so surprised to see at 7% mortgage that this is going on. Now, a lot of the markets have broken down to their lower Bollinger Bands that you're going to see, and they held. And this gives you the first bounce. It doesn't mean it's a turning point. If you looked at what the Russell did, it broke over 10%, so you're in corrective territory in it. But by late in the day, many of the markets came back, and they were nowhere near the lows of the day. Even though the tech stocks, and those took it on the chin today, they were down as a whole. They didn't fall out of bed. So let's take a look and see what we've got. First off, TLT, the lower you go here, the higher interest rates are going. So you can see the market's been falling apart. You have a pattern of a higher high, and then every day, think about this, for 2 weeks almost, you've made a lower low and not a higher high. So the market has washed out the longs. You were just recently at 95 and suddenly you're at 85. It's a 10% break in round figures. So you can see what the market's done. The resistance, 87.59. The support, the Bollinger Band. And voila, the market hits it, moves inside, hits it, stops the decline. So if you become a student of these algorithms and you didn't know where else to look on a chart and you close your eyes, I'd be groping for the Bollinger Band for top or bottom and say, oh, when it gets there, that'll be the resistance or a support number. And it often is, especially when you're not going sideways. When you're going sideways, different things happen. And that's why so many of you have taken the course that we have. You have an embedded reading. This is nothing to get excited about then. Until the red line closes over 21, I contend that good rallies, the first sizable bounce in the market, might be a 15% bounce, something like that. I'm looking for the traders to come into the market. So zone maximum I'm seeing 87.58. I said 15%. Well, if you take 84.75 and take 10% of that, you're at $8. So that's too far away. So it's got to be probably in the neighborhood of 3-4% bounces that you'd be looking at. Let's go to bros. I've moved it over here. Don't be surprised, folks, if you start pulling back right down through here. The market acts overbought. It acts like a market that wants to correct a bit. I didn't say it's going into a bear trend. I said it wants to correct. You spent 3 days over the upper Bollinger Band and you're returning instantly to the 18-day average and momentum's turning down. Not the place to be just yet. CrowdStrike has gone from the upper band to the lower band, back to the center line, the 18-day average, and now back to the lower Bollinger Band. I seriously doubt it's going to find ease of getting through the 200-day average and the 100, but it is in a downtrend. It is not screaming, buy me. So all the techs that had been so powerful recently have given it up. And the Trump trade, as you probably heard on CNBC and Bloomberg, you've taken out all that. So now the market's back to square one, if you think about that part. In Rivian, you were just up to 1665, and today you got down to 1301. I think there's huge support waiting for the market down here, but do you see a trend trade there? I'm not seeing it just yet. In KWEB, you know that I've accused China regularly of not telling the truth. The market is agreeing with me. This is the reason that you're down so much on that. Now we get to Toll Brothers. I'm guessing the aftermarket, and I did not look, I'm guessing the aftermarket on Toll and XHB and the others, it's going to be up tonight. And that's because of what I said when you saw this other builder do so well. So I'm looking for a pop, and I think that that's what's going to happen here. And I think you're looking at a market that is searching now for the area that it can build from for the spring. We'll see if I'm right on that. I believe the same thing could be true of XHB. And I wouldn't be surprised if you get up and challenge that 18-day average tomorrow at all. You lost the bearish embedded reading. I'm looking for the pop to happen right now. Not a week from now, right now. In XLF, okay, you're right down in the financials to the 100-day average, the lower Bollinger Band, and the market's trying not to fall apart from here. Logic says pay attention. You've got PPI, CPI numbers. The market's looking to see what happens. It's your first attack of the 100-day average. You got to go all the way back on this chart. So that is why I think today, and that's why I started this off saying, I think today was a short covering day going into the PPI, but now we have to wait and see what the reaction to it is and what it looks like. In XLI, back in the industrials, looks to me like you want to challenge the 18-day average. This is one of those lost embedded trades that didn't work. It doesn't look like it, but this low took out that low by 20 cents. It is a trade that wouldn't have worked under the way that I monitor that. In the energy, you're in very overbought territory. You've stretched this market from 82 to 90.77. I'd be very cautious if I were you. The market is up not because of demand for the energy, but because of supply shocks that we're starting to see with the Biden administration stepping in and stopping Russian oil flows around. So you want to pay attention. It comes back to roost in in New York markets, the WTI and the like, and that's what we're seeing. In the gold market, you got up on Friday to the upper band. I expect a pullback, but I'm looking for good support, 243 to 242.90. I'd like the market to work off its overbought condition. You have both numbers up over 70. I don't tell clients to buy when that occurs. In the silver market, you can see how it just stepped underneath the last break low. You've gone back to neutral real fast. Notice how no longer is the market overbought either. It was on Friday. It lost everything today with the dollar break in silver prices per ounce. In the copper market, the only thing I can see that's lifting copper at this point in time are actually there's several things. The first main thing is people understand in the trade that there's been the New York copper prices up here, London down here. There's a big gap in between. People are worried about a squeeze play. I've mentioned it, and I'm not going to keep doing it. Some of you have written me, and I've sent the stories that I've read on it to everybody as well. That's what I think went on. Now the market's got to prove itself, and right now, not the best. Down the road, look on the West Coast, look in California. By itself, one of the largest economies in the world, just the state. And look at how many homes and structures have been destroyed. They claim 13,000. I have heard AccuWeather is saying it could be 250 billion in damage. You're going to rebuild. Copper. Other materials, lumber, bricks, it goes on and on. You're still burning things down. You got to get through that cycle, and when we do, it will get rebuilt. It's going to take a couple of years, and as I said over the weekend, that fire is going to skew employment reports, housing numbers. Where do 180,000 people on the run go? Called one of my good friends in LA today. We were talking about it. His family, they're sitting there right now. They're ready to go. They're in an area that's in the warning, and out they go. And I go, where would you go? He goes, I got to go far away because you can't get a room anywhere. That's what's going on. So, and rents, they're going to spike. You know that in California. People will say, nah, the governor's going to control it. Sure. Lower highs, lower lows, coming down in BND, TLT, all of them, still pushing the lower part. Where's the bottom? That's the question. Are we going to see 5% real rate in the 10-year note? If you do, the stock market's probably going lower. On this run, if you peak out or peak out on the downside, let me come back to that, at the Bollinger Band and you get a bit of a rally, then interest rates should back up a little bit. I think tomorrow's PPI will be one of the nails one way or the other that tells us what that's going to do. Let's get over here now and get to the dollar. So I have been telling you I thought the market was going to try to fill this void. It looks bigger than it is. You know, this is maybe 80 cents. That's all it is. And it's doing so right now. The dollar's still on a tear to the upside. And look at how the euro has gone down. I still think the euro is a candidate for parity this year. I think the British pound is going even lower this year. I don't see what turns all this in a quick way. Obviously, what happens with Trump, his presidential orders and the like, that's going to set things up in a way that you've got to pay attention to what's going on. So, as I said, I did a special report on the dollar. I cover in the report price counts, how I came to the 109.80 area, and now the next count. If the dollar keeps going, 114, 115 is a possibility. Yeah, it's if it keeps going. The third count is not as solid as the first price count. The second is less solid than the first, and so on. But that is a possibility. I covered the counts and seasonal charts, 5-year, 10-year, 15-year, to give you an idea where you're at right now, what the market has traditionally done. I even looked at presidential elections to get this all together for myself. So All you need to do is go to iraepstein.com. You can move your cursor up here. There'll be an icon. Go there. When you're on the website, just look at the top left. You'll see the the currency report. I don't know why I keep saying metal tonight. The currency report. Take a look at it. It's only up for 3 business days. Then it's kaput, gone. Everything I did in it is to be acted on or thought about now, not 6 months from now. I'm Ira. Have a good evening. Talk to you later.